So the beta is definitely going to be one of the main things, at least I look at, and that's from experience with trading and even mentors that I've been under. One of the main things that they always point out to me, because that pretty much tells you how volatile the stock is, so you know the risk of trading in. You know, anything dealing with stocks and the trading market, there is a risk associated. So whether you're dealing with yourself or helping out a friend or anything else, you need to know the level of risk they're willing to take. And if it's a low risk, then you definitely want to focus on getting stocks that have a beta below 1.0. Right below that, you have the price per earnings ratio, and that's pretty much just a calculation where you take the market price, which would be the 87.72, and divide it by the earnings per share. Since we're looking at it, earnings per share is how much you're expected to make per year on the stock. So, you know, for every stock of Walmart you're holding annually, you're expected for it to go up $3.28. And this actually flows right to the next point of the earnings date. I know you look at the 328 and think, wow, that's really not that much. Two things: whenever you purchase stock, the best and the quickest way to make a huge amount of money is to purchase in quantity. So you can say, hey, if I had, let's just say 100 shares of it, 328 times 100, and that's what you're looking at. And two, with it being such a stable stock, not really volatile, which goes back up to the beta. You're not really going to make that much off the stock itself. So what the company does is pay its shareholders dividends. So that's the percentage of however whatever stocks you own, you get that times the amount of stocks you own. So for Walmart's case, it's going to be their dividend price is 2.36% per stock, which is going to amount right now to 2008 cents. So again, you got to think wide scale. People have a quantity of these stocks, so on top of making the $3.28 just off the stock, you're also getting paid a dividend. So it makes it worthwhile in the end. Like I said, this is going to be a stock that you want to hold on to for a while. So getting this year in and year out, season in and season out, quarter in and quarter out is going to add up. So that's why they throw it on top. And you're going to find most stocks that have a low beta, they're going to have dividends also, because they know just the amount that the stock grosses alone is not enough to attract people to own it. So that's where the earnings date is. This is when the dividend is set to be released, and this is when you should earn it. This is when it should become available. So it's about a week difference, but it's definitely, you're looking at May 17th, 2018. It's going to be released on May 10th, 2018. The 1 year target estimate is just what it says. That's where they expect the stock to be within a year. So we are in March of 2018. So the expectancy of Walmart is by March of 2019 that the stock is going to be worth $105.01. So there you have it. We've covered our first lesson. We have the definitions of the stocks. We have the breakdown, everything. This is what a stock looks like. Whenever you're going to be researching, this is what you should be looking for and looking at. All these things over here, they can tell you, give you a little bit more insight about the stock. You have the chart over here if you're ever wanting to look and just see how well a stock is done over time. You can click on it. Looks like Walmart has pretty much had a rough week. Um, this is actually another factor that'll help you just determine whether you want a stock or not, because you can look at a stock and like, wow, you know, it's doing great. I want to purchase it. Let me get it. And then you look at the chart and you realize, like, in actuality, wow, it's doing terrible. It's actually just on the way up from where it was, trying to recover from a huge loss that it took. And that can also be a buying factor for you. In a lot of cases, if you see a stock that was doing well and tumbled and it's been gradually going back up, you want to just hop on for that ride and just take it all the way till it reaches its point, its climax, and then sell it again. It's a great way to determine trends for stocks, to see when the stock typically goes up yearly, when it can go down, so you can know, okay, Walmart reached this high in January, so maybe I should purchase a stock back here in June and just hold on to it until the beginning of February. And you can just do that year in and year out, and that'd be a great way to make money. So seasonal thing that you can watch. So this has been lesson one. I'll put up definitions for you all so you can look at in case you want to copy them, write them down, do anything with it. This has been lesson one. I appreciate it. In lesson two, we're going to go ahead and get into the types of ways you can sell stocks. There's short selling, long selling, holding on to it, get into all of that. I appreciate you tuning in and listening. And feel free to pause, write these down, anything. Thank you.